Hey everybody. Morning. Morning. And wow, what a day Friday, right? I mean, it triggered my one I have a tool that I look for daily entries using my signature pattern. It triggered 109 entries for today. We'll go through a bunch of those here. That's just crazy. And I mean just that's it's been like two tickers, four, six, and then 109. I mean, that was a big up day, right? Sky high valuations. Everything's crazy. Mark, Rob, Frank, Gayton, Sergio, Will, Gary, Nancy, Donald, Svenborn. Good to see you all the way from Iceland. Mary, Diane, Jason, Hugh, Lieutenant Colonel Goose in the house. Arturo, Ted, Craig, John, Ryan, Rob, Rongamer, all the way from the Tesla dealer down by the mall. Welcome, everybody. Glad to see you. All right, picture this. You walk into a car dealership. The salesman tells you a Honda Civic costs $90,000. And 90,000, right? When you laugh and start walking away, he grabs your arm, says, "Wait, this time is different. This Honda Civic is powered by AI cup holders and accepts cryptocurrency payments." Does this sound ridiculous? Well, congratulations. Now you understand the current stock market right there. Now, I got a story about the greatest magic trick Wall Street has pulled, possibly ever. And this is a story of how paying $3 for $1 became not just acceptable, but is currently fashionable. It's this tale of sky high market valuations that have reached levels so absurd they make Vegas sound like a casino. I mean, Vegas is full of casinos, right? So that might be a conservative investment strategy, investing in a Vegas casino. But here's the kicker. This is where it gets kind of interesting for potentially savvy investors. If you're up on it and pay attention, this fairy tale might be meeting reality in the coming weeks, months ahead. There's going to be some incredible opportunities for those that are prepared and can see it coming. Let me paint you a picture of where we are right now. The stock market price to sales ratio, you've heard me talk about this before. That's how much you're paying for every dollar a company actually sells. No costs, no anything built into that. We're sitting at 3.2 times. All right. That's the average. That means 3.2 years of all the sales to cover the current stock price. Historical average for the market, 1.6. 1.6 across everything. Across everything right now, we're looking at 3.2. Think about that for just a minute. If you owned a lemonade stand that made $100 a year, would you be willing to sell it for 320? I mean, that'd be a pretty good deal, right? But would you be willing to buy a lemonade stand for 320 that only made $100 a year? Now, this is the interesting part because apparently millions of people, millions of investors think it's a brilliant idea right now, and we're going higher because that's exactly what's happening in the stock market right now. But wait, there's more. There's this thing called the Buffett indicator. I kind of briefly mentioned on it Friday. Maybe it's Thursday. The days are all running together. This thing compares the total stock market value to the entire country's economic output. Right now, the stock market is valued at 217% of the country, the United States' economic output. The long-term average, closer to that price to sales ratio, around 155%. So we're essentially saying that all the companies in America are worth more than twice what the entire American economy produces annually. It's like saying your neighborhood garage sale is worth more than the entire neighborhood's annual income. That's kind of sketchy, right? Wall Street's response to this mathematical impossibility, this time it's different. You see, we've got a whole arsenal of excuses. The AI revolution is here. The Fed is never going to let markets fall. And apparently, cryptocurrency with these stable coins is going to solve world hunger and make everybody rich in the process. I mean, no, here's the thing where we get really spicy and juicy. You see, last year, so-called experts predicted that corporate earnings would grow by 13%. Think about this. That's the experts, the analysts. They predicted we're going to grow everything this year by 13%, and we're going higher based on that. What's actually happened so far? A measly 9%. That's a bit, that's almost 50% under right there. But has the market cared one bit? Nope, we're up 28% anyway. This is like your boss giving you a 9% raise when you expected 13%, you celebrating by buying a Ferrari. Doesn't make sense, right? But hey, who needs logic when you got momentum, right? We're going higher, baby. For 2025, these same geniuses are now predicting earnings are going to grow by nearly 20% next year. 20%. In an economy that's been chugging along at the historic averages, they expect companies to suddenly become 20% more profitable. It's like expecting your teenager to suddenly become 20% more responsible. Technically possible, but you probably shouldn't bet your retirement account on it. I mean, reality, right? Now, here's where this thing gets exciting for us. See, valuations are terrible at telling you when the market's going to correct. Horrible, in fact. Things can remain irrational way longer than you can stay solvent. But they're fantastic at telling you how much it could fall when it does. And right now, sitting in a pretty good powder keg of overvaluation. So, the smart money, what are they doing? First, if you're heavily invested in overvalued growth stocks, consider profit taking, reducing exposure. All right, I'm not saying sell everything. I'm not saying hide under the bed. I'm not saying get the fudge out. But maybe don't have 90% of your portfolio tied up in Palantir or in NVIDIA on stuff that's priced like they're going to cure cancer and colonize Mars simultaneously and be the next coming. Second, look at value opportunities. When everybody else is chasing the AI darlings, there's like 320 AI unicorns right now worth 2 point something trillion dollars. That's like a little bit ridiculous. All right. One of the copywriters wanted to argue that we're not in an AI bubble because everything's looking great. I'm like, dude, we're spending $100 on AI stuff to generate $6 of output. How is that not a bubble? I mean, we're probably going to reset it similar to the way we did in the dot-com era. And then we're going to find out who the real winners are. So look at those value plays, right? The stuff that's not the AI darlings. They're solid companies. They might actually be trading at reasonable price to sales and reasonable price to earnings. I mean, imagine that. There's actually things out there that are trading at maybe even undervalued. Look for companies with strong cash flow, reasonable debt levels, nice PE ratios that don't require a calculator with a scientific notation to actually see all the... I mean, you look at some of these up 130,000% on their price to earnings. I mean, that's a little bit over the skis. Third, consider defense sectors. All right, what are defensive sectors, you might ask? You know, utilities, consumer staples, healthcare, boring stuff that people are going to need regardless of whether the market thinks the next social media company is worth more than the GDP of a small country or not. Now, here's the thing about market valuations. They don't really matter until they do, right? When they do matter, they matter a lot. When the market that's priced for perfection in a world that's anything but perfect, the smart investors aren't the ones buying at the top. This time's not different, even though this time's different, right? I keep hearing that more and more, actually. This time's different. I heard it in 2000. Heard it in 2000 when I started trading. Like, this time's different. It's not a bubble. Heard it in 2007, 2008. I even heard it from clients who came in. Everybody thought they were a developer back then. And then right before COVID, people started saying that again. Like, I saw the signs. And then now here we are yet again. So be careful. Something's coming. All right. The smart investors are the ones positioning themselves for when reality comes a knocking. And trust me, one of these days it's going to. It doesn't make an appointment though. All right. Remember, it's not going to like call you up and put it on your calendar. We don't know when. All right. Might be next month. Might be next year. Might be the year after that. So while everybody else is paying $3 for $1 of sales and calling it genius, maybe it's time to be the person who pulls back from the bar. Your future self might thank you for it. Certainly your retirement account. Remember, in investing, as in life, something seems too good to be true. Probably it is, but that doesn't mean you can't profit from other people's optimism. You just need to know when the party's about to end. You got to pay attention. Make sure you subscribe, I'll do my best to keep you abreast of the situation. So what do you think? Are we in for a reality check? Let me know in the chat right now. I mean, is this time really different? I mean, maybe. Possible, right? Not very probable. So let me know what you think. And if you're watching this later, let me know in a comment. Check in with me. I'll keep on this. I mean, the reality checks from Wall Street, they keep cashing them, right? So anyway, let's get into how we make money today, though. What do you say? I mean, all trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. I predict some things. I predict we're going to correct. Maybe it doesn't happen. Maybe we never correct again. Doesn't seem very likely. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. Just because I talk about it doesn't mean you can make money doing it. If you put your money at risk in the market, you might lose it. So be careful. And if you want somebody to just tell you what buttons to push, you need to hire and consult a financial advisor that can advise you on what you should be doing. We had Jackson Hole on Friday. Powell came out pretty dovish, all but confirming that we might actually do rate cuts coming up next month. That would be on the 17th, right here, of September. We've got we got that 17th of September right here. Got this stuff right here. We'll see. Do we get a reckoning? Now we've got a jobs report coming out next Friday. Not this Friday. Next Friday, we've got a CPI inflation read coming out before they make that decision. So what if inflation's rocking higher due to all these tariffs? Jobs are down. Do they rate cut? Does it matter for the market? Now, I'm kind of watching this. DGS2, 2-year, Delta Golf CR2. That's the blue chart, the blue line. Orange, Fed funds rate. Click this button up here. Add FED, FUNDS, Foxtrot Echo Delta, Foxtrot Uniform November Delta Sierra. Add that to the chart. They're not that far apart. Could they cut a quarter point? They could. Probably put them right down. So right now we're between 4.25 and 4.5. So if they cut a quarter point, we'd be between 4 and 4.25. So it'd be right here. It's been a whole year since we cut. Hard to believe. Now there's been 88 central bank cuts worldwide. U.S. has not been one of them here in 2025. 88. And Bank of England did a big cut. I think it was last week before last. It's running together. The last cut they did, you know what their mortgage rates did? Went up. So I thought these central bank rates controlled mortgages, right? That's the mainstream media narrative. Oh ho ho! Bank of England cut their rate, but the mortgages in England went up. So what if we cut that rate, trying to, how succumbs to all the pressure, trying to cut the rate, trying to push interest rates down in the U.S., and the real rates we actually see go higher? What if? You say it, correlates to the 10-year, blah, blah, blah. I mean, but what if the 10-year drops and we still see mortgage rates go higher? What if it decouples from everybody's logic, Goose? What if? What if? So it's an interesting thought. So here's that price to sales. You wonder, how do you get this? How do you get a price to sales? S&P 500 underscore PSR underscore quarter, right there. We're at 3.27. 3.27 on the market dashboard. So I have this market dashboard. Usually we check in with this occasionally, but got to go up higher. Got to go up higher. It's only quarterly, so I guess we switch to a line chart. There we go. There we go. All right, there we are. Looks like, based on a price pattern, we might actually push it up in this zone before we hit our head. Right there. Getting to that crazy land. Watch out. Remember, 1.6. That's the historic, average right there. We've been above it for a few years. So sky high valuations. When's the party in? And we hit a spike right there. Pulled it back down to reality. We could do another one of those. Pull it back down to reality. And keep marching higher. So doesn't necessarily mean there's a crash that has to happen near term. Big picture, we're going to correct it back out someday, somewhere. So looking at some of these, switch back to candles because that's the way I like it. So right here, look, S5TW shot back up, scratching on the top. Usually when we get up above the top, signals correction coming. Right there. This is just stocks above their 20-day moving average. We shot that baby from almost right around the 50s, right up to the top on Friday. Because that makes sense. S5FI, stocks above the 50-day for the S&P 500. Lower high yet again. S5TH, still marching higher. We were last at the bottom. So this will probably have to come above here before we meet the ultimate top. Doesn't have to. I mean, I said have to, but probably need to. Probably it'd be an indication that we met a top if we go above there. That's why I call it the market dashboard. Now, looking at the NASDAQ, stocks above their 20-day. Big difference here. Our S&P 500 stocks above their 20-day up here. NASDAQ down here. Lower high. Still flushing out here. NASDAQ above the 50-day. Not the rosiest picture here. We still seem to be in a downtrend heading for the bottom. Could occur here. We could get more of a flush out here. And then NDTH, last at the bottom, still chugging higher. So even if we see a little pullback here, 1, 2, 3, we may be heading higher still, similar to the S&P 500. Then Russell, looky, poked out the top on Friday. Russell stocks above their 20-day. These are small caps. We shot from the bottom right up to the top in record time. It only took like 3 weeks. 3 weeks. come ripping right back down. Be careful. Russell's my hedge for a reason. Now look at the Russell stocks above their 50-day. Didn't quite make it up to 80. We may, common pattern, may make a high slightly higher than that before we roll. So we could push this one to extremes. Now Russell on the 200-day still hang in the middle. So we might, doesn't have to come up to the top. We could visit the bottom again, but we might push this on up. Might make a new high on Russell. And possibly could blow out my hedge. We'll see. RSP, looking at the S&P 500 equal weight. I was kind of speculating that we may not be able to make a top in the market till we crank this baby out. There's our targets. This thing broke out on Friday. Finally made a new all-time high when you equal weight the S&P 500. Caution. And this one right here, according to Bank of America, when this goes above 100, things are getting sketchy. Might be time for the market to correct deeper. Or we might already be in a big market correction. You can see what happened in 2022. This thing pretty immediately, early in the year, right there, broke through 100. And we kind of ground that up till we got down to October. Made a peak and then pulled back into February of 23. Then we got a big spike, but that wasn't really a big, like this freaked out. You know, we had bond volatility, but we didn't really see stock volatility so much. It did freak a bunch of people out in February of 2023. Take a look. Yeah, little baby move right here in February. This little thing right here is what caused that big spike in bond volatility. That little back test. We've been nothing but up. Kind of fascinating. Now, we have big potential downside that could get cooking here. But so far, holding up strong, going higher. Down just a smidge this morning on the open. See what the overnight action, did it tell us anything? Nope, not really. Small drift down. At 15-minute was the tell right there, man. Tell you what, Fridays were coming in the open, and pow, powed it. Powed it right back up there. Get a little pullback. It's probably still going higher. Didn't make an all-time high on ES. SPX didn't make an all-time high. So we probably still got more gas in the tank here. Now the tell, if you want, level to put on your chart, right there. We break below that. Niche Keats, not good. No bueno. Right there. So we don't want to see this come back below that. Right there. If we do, this fake out. We're going lower. That's how you tell. Right there. Now, the most interesting chart for me right now is this baby right here. This baby right here. This might be the biggest opportunity I see in the market today. We talk about how to play it here in a moment. Let's clean a few lines off of here. Let's talk about what we got. This is the most beautiful pattern I see in the entire market right here. I haven't looked everywhere, but this thing jumped out at me. Bells are going, whistles are flying. We have this low right here. We have this high right here. This might be the most beautiful 5 up I have seen lately. 1, 2, 3, 4, 5. And that 3 has enthusiasm. Super good enthusiasm. Now, we came down to a 50% retrace. One swift move. And it's been vicious this morning. I had all sorts of things going off yesterday. Ethereum breaking out to new highs. And then now here we are. Down here pulling back. 5-6% overnight. Pulling that up a little bit down to 3 now. So what are we watching? What are we watching? What am I watching? This right here. The most ideal thing I want to see would be this poke right in here and bounce. This may already count. All right. That may already count. That's 5 up. We did a wave 2 retrace, more than likely, in the vicinity of the 4. And this 4 was a running 4. Maybe it was a swift 4, and then that was the running. I don't know. Not getting into the subwaves. Doesn't even matter. Beautiful 5 up. Beautiful retrace. Holding right in the zone where I want to see it bounce. If you don't have exposure to Ethereum, maybe pick up some ETHU on the pullback. Maybe ETHT, a little cheaper. These are some of the biggest decliners here. But they could rock and roll. ProShares Ether. You just want to go BlackRock. There you go. So, circling back to the chart, what is the upside? I talked about this quite a bit on the Crypto Power Plays update for the week. I've talked about it right here on the morning show. We have this resistance zone, right? We got to get through this, baby. Got to get through. If we pop up through it, things look pretty spicy. Now, this is where it's interesting, though. If the pullback we already did is all we're going to get, that next move, that wave 3, that's a 1, that's a 2. That wave 3 hits its ideal target. We're already through it. If we get a little exuberance, we could be well through it. Back test the zone and go on for the ultimate target. So this could be the finality move on Ethereum right here. I really like the setup. Now, where do we know we're wrong? Breaking through that 786 right there. Back down below 4250. Things aren't looking so hot. It's a pretty tight range for Ethereum. The upside potential is where it gets wild. Absolutely wild. Just the next move. If all you caught was the next move. Look at 34% upside. I mean, one of those double leverage, the ultras I went through, like ETHU. Can we look at 70% upside potentially? 60, 70%. Then if we climbed on up to the actual target up here, like around 7,200, that's 60% upside. That'd be 120% on one of those leverage ones. Be careful. Don't risk more. This can fail. It might fail. Right down here. Oh no. Has a beautiful potential setup in place. Short term. Probably play out the next month. Use options on the leverage ETFs. Shoot, no, don't be dangerous. That's a good way to blow up your account. Don't be dumb. Don't play leverage on leverage. Don't play derivatives on derivatives on derivatives. So be careful out there. You can blow up your account that way. Russell pushed on out. If we maintain this, it might tip the odds. Like I said, we might blow out my potential hedge here. We might go ripping right on up here. Entirely possible. Got to watch this. we don't just take it back in the next day or so, probably going higher. Oil coming back up like I thought it would. So this is looking like wave 1, wave 2, wave 1 of 3. Probably going to do a 2 of 3. And if we come up in here and turn back down, this will be my favorite chart. Gold. Churn and churn and churn and burn and burn and burn. And thank you for letting me out on Friday. Gold Rush was a big, nice, fat winner. And if you still holding on to that, you probably should bail. That's a lower high. That's getting near that 50% retrace, and we can easily see this accelerate downward. Bitcoin charts, well, we made a lower low. This is probably a bigger WXY, or since the first move wasn't very clear, and I shouldn't have deleted that, I should just move it over. Working on something bigger and deeper, and probably going down to the daily roadmap line. Cool. Grab that. There we go. Probably coming down here. This was up here. You may be like, well, I didn't think a correction could exceed the start point. Guess again. Completely valid. We get a little too much enthusiasm on the correction there. Probably going to see this come down here before we find a bottom. There's your numbers right there. 71% of all the Bitcoin is still held by investors like you and I, private investors. 71%. That's a lot of people to get scared on this move and start selling to BlackRock. So be careful. A lot of people think BlackRock's got it all based on the narratives you see in the mainstream media. 71% of all the Bitcoin. You'd be like, well, I thought Satoshi had a bunch. He's got like 5%. It's about 5% unmined. 71% held by private wallets, just like you and I. So, private people get freaked out. It's also another reason why I expect crypto summer is probably going to end, and we'll see a bigger correction there. So, let's see. ETHU is not a company. So, companies doing a reverse split is one thing. ETFs doing a reverse split is to stay listed. It's a declining asset unless you catch a big up. So, there's a difference when we talk about dumpster fires. And a lot of tickers are dumpster fires, like UVXY. Absolute dumpster fire all the time, like always a declining asset. So, difference between declining asset, dumpster fire, and a company that just sucks, Darren. Yep. Newegg, this company just sucks. Like, this company actually compete with me right here. No, public company that does what I do. Here you go. They suck. 20-for-1 reverse split. Dumpster fire. They went public during, just out in the back of COVID because things were great. I wasn't a guru during COVID, so I didn't see that. I've been struggling ever since I became a guru. Boom and bust, baby. Probably going to retrace. We'll see what happens. Anyway, let's check in on the Mag 7s. Looks like Apple didn't get the love on Friday. Amazon didn't get much love on Friday either. Lower high. Google did get some love on Friday, poking out. Can they? Oh, what's interesting right here? Meta announced they're not going to roll their own. They're just going to use Google's AI infrastructure. Apple announced the same thing. They're going to build a new Siri on Google's G Mini or Gemini or whatever you want to call it. That's interesting. Google going to take everybody's money. That's interesting. So that's two other Mag 7s going announcing multi-billion dollar deals with Google. Oops, pointed the wrong one. So money flows here, money flows here. Winner, winner, chicken dinner. Even though Google has a pattern to potentially correct, might go up to 217. Fill in the gap. Be careful. Meta, still grinding in here. Like to see that pop on up to 817. Microsoft, if we can hold, not getting the love on Friday. If we can hold here, look for that to pop on up. I need to, is it log mode or not log mode? I don't know. Not log mode, we hit the target. To go with log mode, we came up shy. So, but we're still, fib line's still basically the same place. So maybe 565? I don't know. NVIDIA didn't get much love on Friday either. I got a video coming out on Wednesday about this. Kind of. Outside opportunity, 212. Think about this right here. Think about this. Let's pull this up. So every dollar, $1 move, up or down, is $24.4 billion in the market. Dollar move up, 24 billion going up, coming into, flowing in to NVIDIA. Dollar down, that's $24 billion flowing out into other places. That's a lot of money. That's a lot of money. Right? A lot of money. They're worth $4.3 trillion. What does it take to double the price of NVIDIA right now? From 177 to 340 or 357, 354. Like double, right? Times 2, roughly. 354. What does it take to do that? It takes $4.3 trillion. What does it take to go to 1,000? It takes almost 10x. Ooh, that's like $43 trillion. Yikes. Now compare this to AMD. Right? 162 bucks. You're like, well, it's going to take a lot of effort to double that, right? Almost the same price as, but look, $1 change in AMD is $1.6 billion. $1 change. It's only 1.6 bucks. 1.6 billion bucks. No, their market cap, $260 billion. So for this to double, go from 163 to 326. It only takes $200 billion, $260 billion. What's really fascinating, calculator's on the other screen, 263 billion divided by 24.4. A $10 move for NVIDIA, almost $11 move, the same money involved in that can double the price of AMD. So a $10, $11 move, $10.70 move on NVIDIA is the same equal to AMD doubling. Horrible M. My mouse is doing something weird. So, wild. Wild when you think about that. What's the easier path? This thing can go up 5 or 6x just by the time NVIDIA got to 212. Because look at this move right here. That's $36 move. I can double that move right there. The money involved in just NVIDIA doing that can triple AMD. Maybe even quadruple, right? The $10 move, $10.70 move, can double AMD. So we can add their value once, twice, 3 times. That'd be essentially 4x higher than it is right now. And like, well, the potential is better, blah, 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 blah. We'll see. Tesla showed some love on Friday. There are, on my scanners, there's some ginormous option volume. Looking for a potential breakout later this week. Maybe in the next month, potentially. Lots of people pushing big money, betting on this baby popping up. Elon popping out saying that he's going to make the shorts pay. See what happens there. Netflix still working on potential, either the rest of that move on this correction, and then bigger picture, probably that right there. Probably going to take longer. Now, there's a lot of gainers, a lot of decliners. I'm just going to hit some of the highlights here. All my setups. Stuff was set up for an entry today on my signature pattern. And that one, a little baby move. Let's clear this off. Got this high. We got this low. Got that entry. 128.44. Potential right there. Now, some people will be like, how could I play this a little tighter to the vest? Well, you come in here with a credit spread, potentially, if you wanted to. Play with a credit spread. Might be a better way to play. Now, 23 trades, not statistically significant. 65, that's below what we want to see. And then 1.8 doesn't really matter because that number is not statistically significant. ABG. Here's the high, here's the low. Potential breakout, 285. Update the report. I need to reset to defaults. 2281, 3.5. That's pretty spicy. I kind of like that one. The name that you probably never heard of. Options available? Probably not. Most of these don't have much options. Got monthlies. Not very liquid. ACMR. Another nice potential right here. Got this high. We got that low. 300. Profit factor of infinity. Maybe like, whoa, wait a minute. Profit factor infinity? That sounds crazy. So it's gross profits divided by gross losses, right? If you have no losses, well, 0 on the bottom, that's infinity. Divide by 0, infinity. 34 upside target. AIG. You might have heard of them before. I think I heard of them. Got this high. Got this low. There's a new entry. This one's already in it from back here. Looking for 89. 89, 89. Target both ways. Alley Financial. Got this high. We got that low. This triggered a bunch of stuff. 42 upside. American Express. Kicking off. The bigger upside potential. 335, but we also have this giant upside breakout potential to like 500. I like it. BNF. That one played out. Look at this. Perfect example, right? Perfect example. Why don't you chase higher, JT? That one got out right there at the profit target, retraced right there, set up a whole new world for another upside move. Played out right there. This one stopped out. So does it always work? No, it doesn't always work. Those are pretty good though. 24, 83, 2.1. Not statistically significant, but looks pretty good. BANR. Same pattern over and over. Look at this. That high, that low. There's the entry, and boom. And that worked last time. So look for that one to pop up to 70. Where's the stop? Dollar below the low, whatever it is. You can do the work yourself. BFST. Here's the high, here's the low. Same pattern over and over. A roadmap line, baby. It's a roadmap bounce. Look at that 27 target. BHRB. I think it's funny, all these people say, oh, there's no statistical, like, there's no advantages to following price patterns in the market. They just don't work. Yeah, sometimes they don't work. Sometimes they do, if you find the right one. There's that one, 67.54. BOH. Bank of Hawaii. That one stopped out last time. Be careful. A little bit choppy. Roadmap line down. It's kind of a downtrend. Doesn't negate this working, but I'd be more cautious there. 73.50, basically. 73.40. I always go, when I put my orders in, I always go just even a little bit more conservative. Like this one. I actually got my target at 12. I didn't get filled, or 112, excuse me, 112. Didn't actually get filled because we came up like 2 pennies shy or whatever on that high. 10 pennies shy. High on that was 111.90, and then we retraced. It's like, come on, man. I want to see that pop on up. And like MCD came all the way down to the stop, and now we're ripping back up. I'm basically break even again. Like got in right there, break even again. Looking for that to pop, but maybe like, why didn't you get out at the stop? Made an audible. Decided to stay in. Was low risk. Still felt like we're going higher. So, and another one that's been in for a while. Not great. This one just sitting down here under the roadmap line. Made an audible on that one, staying in. Still looking for the upside. You can decide to do whatever you want to do. You don't have to follow the stop. Stop just statistically, stop $1 below the low. You can do whatever you want to do. I'm still bullish on this pattern too. Bigger picture. Although the market roadmap line kind of easing off a little bit. Coming out of trend. It's been a while since we did that, but led to a big upside potential move back here. Could be the same sort of thing playing out. We'll see. Look at a BSRR. Here's the high, here's the low, there's the entry, 33.19. BXMT. You can see we could be here a while because 109 of these. 20 on the upside. CACC. This one's been chopping here. We've hit some targets, we hit some stops. Be careful. They don't always work, but they do work 74% of the time when we cross and close above that level, triggering the entry. 74 point whatever percent of the time we go on up. 568 right there. Maybe like, well, how do we know? How do we know, JT? Like, what? Why are you so sure? Oop. Trying to pull up a 90% sure I had the statistics pulled up. And oh, go this way. File open. If I can spell right, it might actually pull up the statistics. Cool. I was gonna pull them up, show them to you. Let's see. Might have been a few days since I pulled them up last. Where did I pull it up last? You know, I can find it. CACC. Boom. That pulled it up. You know what's in the document? The statistics for CACC. They're right here. 56,000 trades. Right? It's kind of wild. 56,000 trades. If you want 99th percentile, 147.7 days, how long they last. 1%, still longer than that. Average percent profitable, 74.7. And this doesn't even count other time frames. This is just daily chart trades. So it actually cranks up just a bit. Basically 75% profitable right there. But you know, almost 57,000 trades right there. You might be like, well, I can't really see that very well. That's cool. We'll zoom it up. Right there. Average percent profitable. Cha-ching. Average duration. 42 on this chart, on the daily chart. 45 is really when you go across all time frames, like getting up near 100,000 trades. It's 45 candles. That pushes these numbers out to basically 150 on with the standard deviation 35. So I like to round up, give myself more time. So there you go. There you go. Now looking at more. But wait, there's more. There's like 109 of these. So it's this one. You can look at the statistics at the bottom. 3654. CB and K. Here's the high. Here's the low. Look for 3770. CA. Choo-choo. Here's the high. Here's the low. 136. CLAR. Now, if you want to get these alerts that come out every day after the market closes, the only people that get access to that are Turmeric Trading Lab members. So people I trust with the list. So if you were interested in that, links in the description. But just to show you what it looks like, pop over. Right there's the daily charts. This is what it looks like. Get a chart. It actually charts it out. There's the high, here's the low, there's the entry, there's the target right up there. Charts it out for every one of these. I used to show off these charts, but just pull it up on TradingView. And then it gives you the whole list right there. So, boom. Shakalaka. And I commented, dang, that was a big list. And Sledge was in there commenting too. So, holy banana sandwiches. Cocoa. You see the pattern. There's the high, here's the low, there's the bounce, and target up there, 4084. CVBF. You may be like, well, why can't Market Roadmap get that kind of alert? Market Roadmap's more focused on having optionable trades. So the Market Roadmap list, somewhat shorter, mostly focusing on things that are things you can buy options on. These might be all over the place. A lot of these, since there's like a list of 4,000 I check every day for this, most of those aren't going to have options. There's the entry, 65. Yeah. It's actually a little higher than that on the target because that swing is a little bigger. 67 now. DFAR, that's a little tiny little squiggle. Some of these might fail. Careful. That's already in it from back here. Looking for the upside. DLB, downtrend. Be careful. It's a red flag to me. I'm not keen on downtrends because you see what happened last time. Pow! Didn't get above the roadmap line yet, but 78. Just take a little poke above to get it. ENTG. Can we reverse? 97. ENVA. Here's the target up here, 121. EOG. If you enjoy these, let me know. I'll keep going through them if everybody wants to go through them. Like if you're sick of this, let me know. These are all potential plays. Got the statistics popping up at the bottom. The ones that are over 30 on the total trades, over 80 here, and over 2 here. Those are the ones I like to chase after. That's why, like WC, 46 trades, 89 and 4.6. That's probably going to work out eventually. That's why WC. There's the high, there's the low, there's the entry, 4609. ERX. Here's the high, here's the low, 59. ESTA. This is, these are slower. These aren't day trades. These aren't even, this week trades for the most part. Some of them will work out fast, but the majority of them are going to take that longer time frame that I showed a minute ago. Grab that list here. The majority of these are going to take 42.8 days on average across 57,000 trades. And then the standard deviation on that is like 35. So for 99% of them, it's going to take, if you want enough time for 99% to play out, it's 147.7 days. But that's trading days, not calendar days. When you look at calendar days, it's getting closer to 220 calendar days. So, ooh, that credit spread thing fired off. Go look at that. There's potential there. EWBC. And didn't actually hit on TradingView. FBIZ. The same pattern over and over. Roadmap line. Here's the bounce. Works on all time frames. I'm just looking, these are all daily chart. Nice and slow, easy, give you plenty of time. 56, 65. Can they work out tomorrow? Yeah, some of them pop in one day. Some of them pop in 142 days. Some of them 1% take longer than that. So 147 days, excuse me. So be careful. 51. All trading involves a substantial risk of loss. This pattern can fail. This pattern might stop working tomorrow. It may never work again. It's unlikely, but it may never work again. There's the entry, 973 target, 973 target. Stop $1 below the low every time. There's the high, there's the low, 24.79. And this one's bounced several times and not gotten the target, so be careful. FFIN. There's the high, there's the low, there's the entry, 39.55. HB. 109 of these on one day was an outlier. And maybe, I don't know if it is the biggest day, but it's pretty close to one of the biggest ones since I built this tool last year. It took me like 3 months to back test 4,000 and get that 57,000 trades in the log. 27.17. And let's see. Yeah. There's target 28.54. FMAO. Here's the high. Here's the low. That one's got a ABC correction in there. Oh man, look at that one. Beautiful setup. Perfect proportions. That one looks pretty dang, despite the numbers here, that is like a classic setup right there. FUL. $66.46. What I'm looking for is an Elliott wave pattern. Like this pattern is an Elliott wave bounce pattern. 2033. Nice 3-wave retrace right off the roadmap. This is classic, beautiful. Beautiful. Look at that. 1618. Beautiful potential reversal right there. Beautiful potential continuation right there. They don't have to run big either, so be careful. Here's the high, here's the low. Entry 107.58. HBT. A lot of this stuff most of you probably never heard of. I know I haven't heard of most of this, even though I backtested all of them. I've looked at all of them in the past. 2723, HFV, HFWA. I've looked at every one of these in the past because there's the entry 2646. Did all the backtesting. And it took me, like I said, 3 months of doing this at night. You know, I'd do like 100 tickers. I'd be like, whew, I'm tired. Somebody, why didn't you use AI or something? Yeah. I couldn't figure out any way to automate backtesting 4,000 tickers. 297. H1B. $30.84. Hope. I hope that hope goes up. 1984, 1.3. Yeah, 12 targets. Now, lower price stuff, be careful. The stops are kind of bigger. It's a cautionary thing there, percent-wise. Stops are bigger. You might be like, well, doesn't that skew your results? Not necessarily. There's a target right there. 35, 45. CF. Here's the high. Here's the low. Yeah, we're losing about 10% of the stream. There you go. 63 IEO. Just rip down through here and see. That's 7 trades. IE1. There's another one. KE Keys. Keysight Technology. These guys email me all the time. Nerdy stuff. Make oscilloscopes and testing equipment or electronics. 173. Funny enough, I built some electronics in the background, and for whatever reason, I'm on their mailing list. And 132. Leg. Here's the high, here's the low. Pop up. 11 on the upside. LTH. That high, that low. Maybe like, why that high? Why that low? It's the filter that I've got in here. And there's a swing there, but there's a swing here. MAR. I'm actually bearish on this one. This may be a fake out right here. Be careful. Here's the high. Here's the low. This could fake out and break down. I would be very cautious. But 23.87.5 could play out to the upside. It could play out 288 and still go down. See, it could play out this pattern right here. It could play that out and still do what I expect it to do. $51 targets, MCBS. Yeah, that one played out really fast last time. Couple days. There, 31.60. Ooh, that's another really pretty one right there. 30.86. Do I have enough money to play all these? Shoot, no. I can't play all these. Maybe like, why didn't you pick out your top favorites? Because 109, I don't know. I don't necessarily have any favorites in here. 38, 71, 1.2. That's right on place with that historic average right there. That one might play out right there. MNT, Mountain Vale Resorts. Oh, baby. Come on. If this thing can break out. Ooh, baby. I like this pattern a little better. This bigger 1, 2, 3. We can break out of the downtrend that we've had going for a long time. This thing could get some legs. This might be a good entry for a much larger target. Now, be careful. You know, if we hit the target, it can fail. It can go back down. It doesn't have to even get to the target. It could just fail and go back lower. So, NBHC. Get the the high, we got the low. There's the entry, 41.39. NECB. Stopped out. Do they stop out? Yeah, they stop out. Sometimes they fail. Some tickers have a history of failing. Like, there'll be some of these that have tons of trades and like almost never win. And this one has a negative profit factor, so be careful. NFBK. Here's the high, here's the low. 1283. And in. Not taking requests. That's tomorrow at 30 minutes of awesome. That one didn't actually hit, but there's the 1720 NRIM. These are all set up with my signature pattern in case you just tuned in. So a split coming up out here. It's like 103 on the upside. And not the strongest trender. So what does this indicate? This indicates that since this is a trend pullback continuation pattern, which is what you see right there, this indicates when they have a high win rate and a high profit factor, which this one doesn't, it indicates they do the trend pullback continuation pattern really well. Right? When it's over 30 and this is good and this is good, that stock tends to do trend pullback continuation moves. I'm a trend pullback continuation trader, so I'm looking for trend pullback continuation patterns. This is a potential trend, potential pullback, and now this is the signal that we're going to get continuation. But the continuation, we only really, the high probability continuation is only to there statistically. Now, some of them will trend a long, long time. Come back over here. This is the one I used when I did the masterclass on this several years ago. We enter a new trend, get a pullback, break above the 618, and then we go on a monster run. This one did a heck of a run and didn't stop for a long time. The next time it retraced to the roadmap line was all the way back here. Like some of them go on monster runs. Some of them you can catch a beautiful opportunity. But then at some point, they're going to crush it. That one came up right there. See, that one's, when I talk about, I don't like the ones that trigger under the roadmap line, but that doesn't mean they won't work. Like here was one right here. There's the high. Here's the low. Triggered the entry. Came back to the low. And then boom, right up to the target. So that was a big fat winner, even though historically significant, statistically significant, wins a lot, but it tends to lose money over the long haul. So got to be careful on CVS. Back when I did this, I didn't have the tool coded. I just was looking for them manually when I actually used this as the masterclass. So there you go. Now I'm looking at the current. Already in the trade. Looking for the upside. There's another bounce right there. Another entry. And looks like we scraped the target there. So boom. And it won't, like the caveat here for my algorithm, it will only take the first one. It won't take the second one. If it sets up two of them, only takes the first one and then target. NWN. That way it doesn't like skew the results with multiple entries on the same one for a choppy pattern. And like, it's like chops, gets it in like 4 times and then boom. And then, skews the results. So I have a filter on it to only get in one time. So the bigger pattern there, looking for that to get above here. But the smaller pattern on this one, this high, this low. See, it's already in it from back here. Already in this pattern from back here. prime example, one chopping around. Chop, 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 chop. It gets you in like, get you in back here, get you in right here, get you in right there, and then get you in right here. So this one's stacking up a bunch of potential entries. That one plays out right there, 43.73. NXE. Here's the high there. It's actually tighter. That one, yeah, this one's close to the target. And not a big mover right there. There's your high, there's your low. 745. There's your high, there's your low. 1992, OFG. There's your high, there's your low. 46.89, ONB. Maybe like, you know, what about smaller time frames? That's what, this is the same engine that powers Triple Threat Trader. The triple triggers Apollo algorithm. Why it's called Apollo right here. Same algorithm runs on all different time frames. I actually throw out alerts for them, and I charge for that stuff. So I built a system that kind of tracks it and everything, and I figured, you know, if I put all the effort into it to build the tool for myself, I sell access to it, somebody ought to pay me, not just get it for free. That's kind of the way life works, right? 1961 on that one. OSIS. It's the high. That one, oh, it looks like it spiked. Yeah, it did spike all the way down in there. 244 on the upside. Reasonable numbers here. PEB. There's the high. There's the low. There's that one, 1155. PEBO. Hey, we lost another like 15% off the stream. I'll probably wrap this up here in a minute. With the bias of the day, 3290. PFG. I mean, just being honest with y'all, I mean, I'm just sitting here talking right now as I run through all these. Get inner thoughts of JT. There's the targets. 25, 60. Kind of negative on that one. PFG. PPG. Pretty sure these make paints. $123. 45.77. 1.6. Better than average, but not smoking hot. PRVA. I see what it picked up. That one and that one. Entry 23.76. PSX. Ooh, look at that. Nice. Beautiful three-wave retrace. Continuation. And I'm already bullish on this one. Big picture. I don't have it drawn on here, but bigger picture. Already bullish on this. I thought we might retrace a little deeper, but already bullish. Like it's, I think that's on the potentially bullish list. Nope, not yet. It's written on my notepad. It's one to keep an eye on. Rebecca. There's the high, there's the low, there's the entry, 79.76. Look at that win rate. So this is one of those cases, like 2 trades is not going to wreck this. 85.7 at 3.2. That one's probably going to pop right up there. 79.76. RDVT, red violet. Here's the high, here's the low, there's the entry, 53.20. Rock solid. Gibraltar Industries. Like a rock. 69.55 targets. SAH. This is certainly the most of these I've ever thrown out in one day to the public. So you're welcome. There you go. 92.55. SCHH. Schwab. So real estate trusts don't typically perform good. They're not typically trend pullback continuation moves without doing the adjustment. They typically pay a big dividend and don't typically trend without the dividend adjustment put in there. But there you go, that one firing off. This one, little baby pullback and already at the target, looks like. S-Lab. They've been churning in this downtrend of lower highs. 159 would be the target. SRCE. There's just a lot of patterns. Like I've traded these for years, hunting for these by myself without automation. Now, thanks to all the followers, I've been able to afford to build tools to help me find this stuff instead of flipping through thousands of charts a day, 6732, and trying to eyeball it. Now I have tools to help me pull them up. It's not perfect, but I don't know anything in life that's perfect. So 142 on the upside, STRS. Ooh, that one looks kind of a little bit gnarly there. 2191. We're almost done. Almost done. Then I'll give you my bias and then we walk away. Kind of already gave you the levels to watch. There's the high, there's the low. That one looks like we're ripping on up to 85, 28, 92. Holy shnikes. Look at this. 2 trades is not going to wreck this, so that's okay. Holy guacamole. This thing almost always wins. 9 profit factor. Holy schwank. Schwank, schwank, schwank. That one's probably going to work. Dang. Dang, 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 dang. How do you play it? Buy some shares. Could have caught them on the pullback. Probably going up here. Now, last time didn't get any extra, so don't get overzealous here. Go for too much mustard on your hamburger. Sometimes it does run. Just watch for it. Now, you may be like, well, why didn't it pick up that one? Took too long. Why didn't it pick up that one? Took too long. Why didn't it pick up that one? Took too long. So my tool is very picky about how long it takes to bounce. Won't get in more than one, and it's very picky about how long how many candles are involved in the setup. Why am I picky about it? It's just what I spent a lot of years actually putting the code to it to figure out what the best ones were. 409. $62. Texas Instruments. This one, look at this. Pretty nice one too. Pretty nice one. Bigger picture. I'm bullish on this. Part of the bring the chip making back to the United States. 40 trades, 85, 2.2. That's all the stuff I'm looking for. And this one actually has some options that are reasonably liquid that you could play. You could do a credit spread right at the money if you wanted to. Sell puts right at the money if you wanted to. Yeah, highly liquid, weekly options. Not a bad one. Not a bad one. That one was on the weekly watch list. That's how I knew that one. Did that weekly watch list yesterday. Fired off right there. 1938 targets and not much history. UVSP. Here's the high. Here's the low. 3350. VDE. And 127.75. VNDA. Here's the high. Here's the low. And 526. VRRM. Vroom vroom. 2632. WSPC. Here's the high. Here's the low. Target 3469. WSFS. I may be sloppy here, just so do your own work, do your own fib lines. I use the 1.1448 as the target. That's 90% of the way to 1272, in case you don't know. There you go. That's the target right up in there. That number is actually around 60, 69, since you can't see it very well. 60, 67. I always tend to put my order just below that level because, hey, if it pops through, triggers. I usually roll with a limit order on most of these. WTFC. Here's the high, here's the low. Didn't actually activate the tool. 138.86 XLE. Spider Energy. This one's been a monster. Monster. There's the high, there's the low. 89.63. Read the numbers in the right order. XPO Logistics. There's the high, there's the low. 146. And pulling back, so better opportunity on that one. Looks like just slightly. 1283, 1.2, 1.1. YMM. There's the high, there's the low. 1386. And Zion. There's the high, there's the low. 58 right there. All right, that was the whole list. That's like, I think that was 109 of them. If it wasn't 109 of them, the rest of them are in the biggest decliners or losers list. So what am I watching today? Let's break it down. That level, set your alert. Right there. That high. This high right there. If we get below that, sets up that we're going lower. Simple as that. What are the support levels for that? I'm glad you asked. They are right here, right here, right here, and right here. Starts out 6160, then we drop down to 6,000, then we drop down to 5,600, then we drop down to 5,100, and that's kind of the resistance we've got cooking. And if we start below that, well, keep coming back for more. Make sure you hit subscribe. We'll turn on notifications. We'll talk about it as it happens. So right now, though, if we broke down today, we could get down here. Don't expect it. What do I expect? Going higher. We set it up. We got near the high. Got near the all-time high. We didn't set a new all-time high, but probably going on up. That daily resistance on the upside. Looking for that 65, 62 level. That may be the ultimate top. That's the target on the upside. I'd love to see it. Doesn't have to happen. I'm biased long. I still think we're going to hit that. Then I think we're going to retrace more deeply. And then I think we might actually, it's actually possible. We might push on out to 71.30. This market might prove me completely wrong. I thought we'd go below 4 before we go above 7. That's my big prediction for this year. We might retrace it, retest the breakout, and then go cruising right up there. Just take this thing to ridiculous levels. Ludicrous levels. Plaid levels. Anyway. Have a great day, everybody. Be careful out there. You know, the account you save may be your own. Nobody's going to call you and tell you when the top's going to be. I'll do my best to be ahead of it, stay on top. But, you know, I might not see it till it's there. Have a great day. We'll see you again tomorrow.